Alright guys, so in this lesson we're going to be digging into the second management strategy, so management part 2, and we're going to be talking about short-term aggressive. Okay, so what is the short-term aggressive strategy? It's very similar to the short-term strategy, meaning that it starts off as a short-term strategy, same as the previous one, and later, based on what happens after that trade is taken, you might decide to take it as a short-term aggressive strategy, and how would that look like? So let's say you take a trade, and maybe you're targeting 5%, okay? And you enter the position, the trade explodes in your favor. And it's going, and it came very close to your profit target. Maybe it came to 4.5%. And it still didn't have a pullback, So it exploded to the upside massively. It's very close to your profit target. It still didn't have a pullback, and all of a sudden a 4-hour high test has occurred. So what do you do? The short-term management strategy will tell you, well, wait for a trend change. Wait for that 1-hour 50 EMA break. But when that 1-hour 50 EMA break happens, all of a sudden it's not 4.5% anymore. It might be 3% or 2.5%. So a short-term aggressive strategy is, it starts off as a short-term, meaning your mind right away tells you, okay, I'm going to be managing this, enter on trend change, exit on trend change, until something else tells me otherwise. And if your profit target is just being missed a tiny bit, and you got this high test reversal on a 4-hour chart, and you believe a big pullback is coming in, you can take your profit, And by doing that, you're pretty much locking in as much profit as you can before a pullback happens in the market, Now, it doesn't have to be taken only when your profit target is being missed. Sometimes you might be, targeting a big number. Maybe you're targeting like 10%, and then price action came to about 6%. And then you believe that there's gonna be this big pullback, and when this pullback happens, you're gonna have uncertainty. You're not gonna know whether this will continue going up or whether it's going to break down. Or what if it breaks down? Then instead of being at 6%, you might be again exiting at 3%. So do you want to lose 3% on a pullback, or do you just want to take profit? So there's going to be cases where you might just want to take your 6%, without waiting for that trend change, without waiting for that breakout because of what's happening in the market. And again, it'll be the same kind of principle. The trade explodes in your direction, and it's going, and all of a sudden it's already sitting at 6%, and you get this beautiful reversal candlestick. Maybe you have a double top that's developing on a 1-hour time frame, but it still didn't break down. It still didn't break the 1-hour 50 or the 4-hour 50, right? But you really believe that there's going to be a big pullback coming in, and you do not want to hold that pullback, because again, you're going to lose a lot of percentage, holding that pullback. And it can literally, sometimes it can be huge. There was a time when I was sitting at 10%, I exited, at 8, and then right away it dropped to 4, and that can happen. So by utilizing the short-term aggressive strategy, you'll be able to exit for as much profit as you can, and the short-term and short-term aggressive strategies, they work together. They are great. That's what I do all the time. Pretty much I'm using those two strategies all the time. The third strategy that I'm going to show you is just a bonus. It's an option if you want to use it. I personally don't, but it works great. But I use these two strategies, so I use the short-term and the short-term aggressive together, and I find that it's a beautiful package. So with that said, guys, without explaining this any further, let's hit the charts and I'll show you exactly what I'm talking about. Alright guys, so in these examples, again, I'm going to go through a few screenshots of my positions of the trades I have taken. In these examples, I'm going to show you short-term aggressive management, okay? Starts off the same way, with this management, short-term aggressive, it always starts off with short-term management style, meaning exit on a trend change. That's what it always kind of starts off with. But it eventually might turn into short-term aggressive. Short-term aggressive is more of a discretionary type of management style, okay? More discretion, whereas short-term management is black and white. Breaks the 1-hour 50, you exit. Breaks the 4-hour 50, you exit. Breaks the trend line, you exit, period, right? Short-term aggressive is more discretionary in a way that you exit before the break even happens, right? So you make that conscious decision to exit before the break even happens. Let me say why. Let me explain why. Okay. So here's an example. This was an advanced breakout taken, a little bit more of a discretionary ABO, because I took it a little bit earlier because this was a great trade. I love the higher time frames a lot. And I took this trade long as this discretionary advanced breakout. And then once it kind of fully broke that 4-hour 50 EMA, then obviously at that point you lock in profit. At that point I bulletproof my position, let it ride. And then it kind of exploded massively that first day. So not only did I really lock in profit, but I moved up my stop loss to pretty much lock in like 1% or so at that point. At that point I just locked in 1%. And then it had this pullback. At this point I'm still kind of letting it be. It never broke down on a 1 hour time frame. The 4-hour 50 was still kind of below. So at this point, that during that pullback, what I ended up doing is I first locked in 1%. Once it fully kind of cleared to the upside, I locked in 1%. Then I moved up my stop loss a little bit farther, closer to that 4-hour 50, and locked in pretty much about 2%. You can see this red line, right? That was my stop loss. So that was locking in about 2%, maybe a little bit more, right? That was right here below the 4-hour 50 and kind of below the 1-hour 50. They were kind of close together at that point. So I was locking in about 2%. But then I chose to exit early because you can see here, the 4-hour chart started to form a double top, right? And give me very strong reversal candlesticks to the downside. These high tests, it started decelerating, forming these high tests. On a 1-hour chart, I can draw in a wedge here if I wanted to. If I connected the highs, this would have been kind of a wedge pattern. So I didn't want to wait all the way for that 1-hour 50 EMA break. I just exited right there. As soon as this 4-hour high test was kind of coming to a close and it broke that 5-minute 50 EMA to the downside, I took my profit, period. I was targeting, the thing is here, I was targeting a little bit higher, targeting for about 7%, which is this green line above, but I did not want to hold the deep pullback anymore because I saw, okay, the 4-hour chart is forming a double top with crazy candlestick formation. And at this point, I'm like, okay, time to go aggressive, locked in my profit, and moved on with my life. Simple, right? Let me show you another example of this. All right, here's another example of the short-term management. So again, short-term aggressive, it always starts off as short-term, exit on a trend change, and then turns into short-term aggressive if you want to, okay? In this case, it turned into short-term aggressive for one reason, okay? So look at that. It was a CBO. This is a beautiful CBO. And after the 4-hour double tops, break, retest, go short, right? This is a perfect CBO. Look at the 1-hour chart also. And then it kind of fell. And the 4-hour 50 EMA still didn't clear my entry. So I didn't bulletproof right here, right? Obviously, the 4-hour 50 EMA was never cleared past my entry price. And then once the 4-hour 50 EMA cleared past my entry price, it was pretty much the second day, once it accelerated to the downside. At this point, I took my stop loss to break even, maybe a tiny bit lower. And then it continued to go, and then you can see here, I didn't do anything. I was about to hit my profit target and missed. But at this point, okay, I still didn't do anything. But at this point, I could have potentially exited my trade, right? With a short-term aggressive style, because you can see here, profit target was missed. That was 5%, right? And then it kind of started to explode to the upside. And on this 5-minute break, when it was exploding to the upside, at this point, I could have taken profit, okay? But I missed that. I wasn't on the charts. I'm assuming I was sleeping at this point, right? So short-term aggressive is like when you're on the charts, right? It has to be you're on the charts, you're seeing what's happening, and you're making this decision to exit, kind of discretionary exit for a particular reason, because maybe your profit target wasn't hit and you believe there might be a deep pullback. Like at this point, if I was on the charts and I saw this 4-hour candlestick that was right here, profit target was missed, and this acceleration was happening, then I'm like, okay, this might turn into a deep pullback. So that's why I probably would have taken my profit there. But instead, I kind of started consolidating. I wasn't on the chart, so I never took my profit, and started consolidating, and then bounced off the 1-hour 50. And at this point, kind of locked in at 1%, and then once it started to kind of decelerate, it was missing my profit target. it was just kind of stalling here, right? And giving me bullish MACD. And as it was stalling on that 5-minute time frame, kind of like at these 1 hour lows, it didn't want to go any farther. I just made a decision. Okay, I'm targeting 5%. I'm sitting at 4.5. Price action is slowing down. Price action is stalling. Doesn't want to go any farther. I took my profit, period. Because at that point I was risking a pullback. And you can see here my profit target was missed and it started to go back up again. So that's short-term aggressive style. It's still, you have the same approach that, that you're going to exit if it breaks down 1 hour 50 EMA or whatever. But this is taking it a little bit step farther and you're exiting before because of your discretion, because of the decision you make. Okay, it's missing my profit target. I don't want to hold the pullback. I don't want to wait for a 1 hour 50 EMA break because at that point I will lose 1% or 2%. If I wait for that exit, I will lose a lot of percentage. And I'm already sitting a good profit. So I'm like, okay, time to exit. And that's what you do. Let me show you another one. All right, here's another example of short-term aggressive management. And again, this was a CBO, so a complete breakout. And again, management starts with the same as short-term, same kind of stop loss protection once it fully clears. So here you get the 4 hour 50, right? So it's a CBO, so I'm waiting to bulletproof once the 4 hour 50 is kind of way above my entry price. So that was on this day. I was already 1 day in, 2 days in, 3rd day into the position. That's when I started to bulletproof my trade. And I think at that point I just bulletproofed. That's about it. And then I ended up exiting. I was targeting much more than 4% on this, right? So this was a much bigger trade. And I did a discretionary exit here for this reason. You can see that 4 hour time frame is kind of way up and it's forming this tweezer top reversal candlestick pattern on the 4 hour chart. At this point, I'm like, okay, chances are this is going to be a big pullback. And you can see the 1 hour time frame has bearish MACD divergence, right? At the same time, we got bearish MACD divergence on a 1 hour chart. And I'm like, okay, I do not want to hold this 4 hour pullback. I'm taking profit right now. At this point, I was sitting at 4%, 4.25. And I'm like, okay, time to take my profit and move on with life. That's it. So more of a kind of a discretionary management style. This is typically utilized when it's like explodes massively to the upside and you don't want to hold a deep pullback. Because in this case, if it pulled back up and all the way to the 4 hour 50, right, I would have probably lost maybe 2-3% on this, So lock in profit, move on. So I do a lot of short-term aggressive management. That's what I prefer. It's not always the best case because it can just kind of bounce off the 1 hour 50 and then continue going much higher, right? So it's not always the best case, but that's just what I prefer, because there will be times where it just kind of bounces off the 1 hour 50 and continues to go up. That's why I said this is more short-term aggressive, but if you want to have the most consistent management style, then you exit on either a 4 hour 50 break, or in this case, you could have exited on a 1 hour 50 break, instead of exiting where I did now. In this case, it would have been more of the 1 hour 50 because you probably would not want to wait all the way to the 4 hour 50 EMA break. You'll be losing a lot of percentage there. So if you were just utilizing short-term management, you would have probably exited on that 1 hour 50 break. But at that point, you still would have probably lost 1.5% or so. So at that point, I'm like, okay, I don't want to wait for that. I don't want to push it any much farther, so I just ended up taking 4.25% there on the short-term aggressive exit, pretty much once the 5-minute 50 EMA was being broken. And once I saw that this 4 hour tweezer is being developed. So that's one example. I got a few more here, so let me show you another one. And here's another example of this short-term aggressive management, right? So this is a beautiful CBO, beautiful break and reads to the 4 hour 50 after this wedge breakout. Right, so you guys are getting a lot of exposure here with these screenshots again, which is nice. But yeah, so CBO, so I don't start bulletproofing until, that 4 hour 50 EMA kind of fully clears past my entry price, right? So in this case, I pretty much ended up bulletproofing. I believe it was like somewhere up here on these highs, once this kind of retest happened right here, I believe at that point, I pretty much bulletproofed my position and then let it ride. But you can see here, it started to go up and up and up and up and up. I was sitting at, I believe at the high, sitting at about 5%. And then this massive 4 hour height has developed. And as this massive 4 hour height has developed, as this 1 hour chart was kind of accelerating to the downside, At that point, okay, I'm exiting this position. I could have waited for the 1 hour 50 EMA break, but that would have resulted in losing more profit, So at this point, I was already confident this is probably going to retrace all the way to the 4 hour 50, maybe even farther. And I don't want to hold that deep of a pullback and lose a lot of percentage. So at that point, I'm like, okay, take my profit, move on. However, again, you could also utilize the short term, which is much more consistent. You just wait for that 1 hour 50 EMA break. And if it breaks the 1 hour 50, exit. But in this case, I just went aggressive because I believed because of this massive 4 hour high test that a deep pullback's happening. So I just wanted to take my profit right at the highs, right? So like I said, a lot of times I do short-term aggressive. I start off with short-term, but then turn aggressive on my management. Let's see another example. So in this example, we're going to see pretty much, this is another one of those cases where my profit target was missed. So I end up going short-term aggressive management, okay? And same thing, so this was a CBO. So again, I bulletproof my position once the 4 hour 50 moves past my entry price. So it's pretty much kind of like right somewhere here, during somewhere over here, I bulletproofed, right? So when price action was sitting here on the 5-minute chart, somewhere there, I bulletproofed my trade and let it ride. It was just kind of going. At this point, I didn't exit on any of these 1 hour 50 EMA breaks because you can see the 4 hour 50 is like right there. So if the 4 hour 50 is like close by, I just wait for the 4 hour 50, right? Because the 4 hour 50 was close by. So at this point, I didn't want to do anything. It's close by. I'm targeting much more, than exiting right here for 1%. I was targeting, I believe, about 5%, maybe 6% on this, So I didn't want to exit too early. That's the thing. You also don't want to exit too early. So a lot of times I will wait for a 4 hour 50 EMA break at the beginning. It's once it starts accelerating farther that will kind of turn into 1 hour management, But at this point, I was letting it ride, waiting. The 4 hour 50 EMA was close by. So every single time I was just kind of waiting on that 4 hour 50 EMA break to exit. And at this point, I believe I just kind of kept my stop loss at break even. Maybe I moved down a little bit more here, kind of like during the last days of the position. And it wasn't until my profit target was missed. So you see my profit target was right here, that green line. You can see it was just missed on a 5-minute time frame. And then the 1 hour chart started accelerating to the upside, forming a bullish engulfing. The 4 hour chart starting to form a bullish engulfing, right? And the 5-minute 50 EMA was broken to the upside on high volume. At this point, I'm like, okay, this is probably going to turn into a deep pullback. I don't even need to wait for a 1 hour 50 EMA break right now. I'm just taking profit right there. So that's what I ended up doing. Again, short-term aggressive. You don't want to hold a pullback. You believe it's turning around, missed your profit target. You're locking in profit and moving on. So I like doing that. It's more of an aggressive style. Again, it doesn't always work best, but in this case is where your profit target is missed, it works really nicely. All right, so in this example, here's another one of short-term aggressive management. You can see here, this was an advanced breakout that was pushed. I made 7% on this trade. That was a good one. So it started off as a beautiful ABO here at the highs. You can see 4 hour chart from this beautiful high test. The 1 hour chart was within this triangle and got squeezed out, It's a beautiful ABO, and it just continued to drop, and pretty much once it cleared the 4 hour 50 EMA, at that point again, I bulletproofed and let it ride and just kind of continued to go. And you can see here now all of a sudden started kind of accelerating, and I wouldn't want to hold the pullback all the way to the 4 hour 50, right? So I went more of a short-term management, kind of focusing more on the 1 hour 50 at this point. So if I didn't exit here, I would have exited on the 1 hour 50 break. But look at it. My profit target again was this red line here for, I believe that was about 8% or so. But you can see the 4 hour chart just kind of missed my profit target once, missed it again, and started forming these tweezers on a 4 hour time frame. And then I eventually kind of started to pop to the upside. I ended up taking my profit, because at that point it was the 4 hour tweezer. I definitely wouldn't even want to wait for a break of the 1 hour 50 EMA because again, I would have lost a lot of profit there. So I just ended up making this decision. My profit target was missed. Time to exit and move on. And I took 7%, Otherwise, if it broke out higher, I probably would have taken maybe 5 or 4, which is still great. but definitely not 7. And that's kind of it, So I think at this point you guys understand what short-term aggressive management is. It's pretty much short-term aggressive a lot of times is used when your profit target is just missed, okay? A lot of times that's when it's being used. When your profit target is just missed, then you decide to take profit, okay? Because you believe a pullback is going to be coming and your profit target was just missed on these large trades, okay? It's only on the large positions. It's not going to be on the ones where, you take an ABO targeting the 4-hour 50 EMA. You're not going to do anything there. If you take an IBO targeting the 4-hour 50, again, you don't do anything there. Or if you take a CBO targeting the recent highs, you don't do anything there with management. Management only applies really to these large positions, the large trades, the 3%, maybe the 3%, but not even the 3% trades. It's typically when you start going into 4%, 5%, 6%, 7%, 8% category, that's when you really decide to apply a management style. And to me, it always starts off as short-term management, right? So it always starts off as management 1, short-term management, always. Exit on a trend change or exit on that breakout. That's my short-term management. And it's either going to be, it will start off being as the 4-hour 50 EMA, focusing on the 4-hour 50, and the farther it gets, then I will start to tighten it and focusing on the 1-hour 50, and once it breaks the 1-hour 50, I will exit. The farther it gets into the position, I want to lock in as much profit as possible. So at the beginning, I want to give it room, so that's why I will focus on the 4-hour 50 a lot. Bulletproof once it clears the 4-hour 50, or bulletproof once the 4-hour 50 it passes my entry price of the CBO, so I focus on that a lot at the beginning because I want to just give it room to breathe, room to move. I don't want to choke it. But the farther it goes, then I want to lock in as much profit as possible. So a lot of the times I will focus on the 1-hour 50 EMA the farther it gets into the drop or into the run. If I want to give it more room because I want to push it even farther, then I don't want to choke it too much. Then I will focus on the 4-hour 50. If I'm pushing it out like much farther, then I might choose to focus on the 4-hour 50 instead, right? So it really just depends on how much you want to lock in and how much you want to let it breathe, So that's where you kind of apply your discretion. That's your choice. Management is kind of your choice. This is the tool. You either exit on a break of the 1-hour 50 or exit on a break of the 4-hour 50, right? Or maybe a trend line. You choose, you decide. That's your decision. But for the short-term aggressive, what we kind of did here, short-term aggressive mainly applies to when your profit target was just missed. You believe a big pullback's coming in, so you're taking profit, because of massive low that was just formed. Or maybe you're targeting 10% and it just kind of exploded massively to the upside and it's sitting at 7. So exploded massively to the upside, it's sitting at 7, and now you're like, shit, a deep pullback is probably going to happen, going from 7 to 5 to maybe 4%. And what if it breaks the EMA at 4%? I could have taken profit at 7. So in those decisions also, you may choose to take profit right there because you believe it exploded so much. You believe that a big pullback's coming in and you're happy with the number of 7%. You might choose to take profit before even waiting for the 1-hour 50 or the 4-hour 50 EMA break. So that's short-term aggressive, okay? In the next management style, I'm going to show you something that I don't use too often. It's a management style that I don't use too often. It's mainly for swing trading, like long-term swing trading, right? But these two management styles are the ones I use all the time. The other one, it's just a tool for you guys. It's an option for you guys, management number 3. It's a good option. I don't use it because I'm more of a targeting that daily run, so that's what I focus more on, targeting that daily run. But the other option is just a different option for swing traders. Thing is, swing traders can utilize these two management options as well. I'm pretty sure you guys are going to probably choose these options as swing traders as well. It's just focusing on the monthly run and a daily trend. So the daily 50 EMA instead of the 1-hour 50 EMA, the weekly 50 instead of the 4-hour 50, right? So you can apply management 1 and management 2, short-term management and short-term aggressive to swing trading, right? Just change the time frames and focus on the daily 50 and the weekly 50 instead of the 1-hour 50 and the 4-hour 50. Same approach, right? Just higher time frames. But the management 3 is going to be a little bit different. It's going to be focusing more on horizontal support and resistance lines and higher highs and higher lows, right? So let's have a look at that next one.